Hello and welcome to today's video. There is something special about September and October in the stock market. Do you know what that is? Have you ever heard of the term the September effect or the October effect? No? Well, in this video we'll see what those are, and we'll also see what or how your perspective in the market affects your decision that you take. And most importantly, how you can avoid them. How you can control them. So hit the like button right away so a lot of people can get benefit from this effect. Let's get started.
I could change the past with all I'm achieving. Got my foot on gas, never stop competing. If you break like glass, then this life's gonna eat 'em. Make mistakes.
If you've been in the market for a longer period of time, chances are that you have probably bought and sold shares based on the market emotions, based on what people are saying, what people are thinking about a share or a particular security, rather than purely investing your money based on the calculations, based on the analysis that you have done on that particular stock. Why does this happen? Why is it so that almost every one of you have invested in a stock, in a security, based on what, the suggestions that others have given you? Why is it not possible that you always do a due diligence, a thorough research on that security and purchase the stock? You have done it later on, definitely for sure, but during the earlier phase of your life, you have almost probably the maximum amount of time you've taken somebody's suggestion and invested your money on it. Most of you have done it. This happens because you have a goal and you have set a time frame to achieve it. And so now you set on into this trading world to trade and make huge profits to get to that point faster. Now the worst part. While trading, if you have your TV on, if you have those news channels, you have those analysts sitting and analyzing a stock, giving their recommendations on a stock, that's where you make the biggest mistake. If you do that, I guarantee you, it's an absolute certainty that almost 99% of the time, you are going to buy onto that particular news that's coming on air right now. You will buy onto it because they will create scenarios, they will create the panic in such a way that you will fall for a trap. You have analyzed something, the news says something, the analysts on those channels, they say something, they say absolutely opposite to what you have investigated right now. It gets onto your nerve. It sparks that fire in you. It tells you something is wrong. Definitely you rethink, you redo it, you redo all your calculations and you miss the train. It's gone. Your opportunity to make the profit that you thought of making it right now, it's gone forever. The stock has moved up and it has come down. You have lost your train. Reason? You listen to that idiot speaking. And what's worse is, if you listen to that and buy into a stock as per their suggestion, it may or may not work, but then that is something which very commonly happens in the market. And it's just not about buying, or it's just not about buying or not buying a particular security. If you have bought a particular security, those panic creators, they'll make you sell off. They'll make you sell off way before it has actually reached its maximum potential. You knew the potential would be somewhere around this. This is the highest point that you have analyzed. And you will be forced to sell off at a very low profit margin. It's all because of the panic, the chaos that these news channels, the team behind it, they create in your mind. And that's a deadly poison pill during your trading. Now, even worse, there are scenarios when you don't feel like making a trade. You're just looking into the market. You're just being an idle trader. You're idly just watching what's happening in the market. What's up? What's the current scenario? And when you get onto these nerves, when these excitement news, they come onto these nerves, you suddenly start feeling like you haven't made a trade for a long time. Let's do it. A period when you're supposed to take a rest, a long lasting period when you're supposed to take a rest because you have not been performing well for the last couple of trades or maybe last couple of months in trading. You thought that you would take a break. It doesn't allow you to take it. That's a huge mistake. That's a huge blunder. You just buy and sell because you haven't made a monetary transaction for a long time. Wow, amazing. How well it affects your mind. Now you may say that you are well experienced in the market, you have a good experience in the market, and you are not bothered, you're not disturbed by these TV tantrums, and they don't affect you. They don't affect your thinking, they don't affect your the trades that you make in the market. It's good if that happens to you, but it's very difficult. Have there been instances where you have missed a trade because you have missed a very wonderful news of a particular security or a stock? Has that happened with you? You have just watched a particular trade just move up and come down, and you just sat idle, you didn't take any action. Has that happened with you earlier? I'm sure it has. See, these things will happen in the market, and that's the reason why we see that the market often does not move in the direction we anticipate it to be moving. It moves absolutely in an opposite direction. See, anytime in your life, be it in the market or outside the market, if you are taking a decision based on your personal preferences and experiences, you are being biased. This is known as cognitive bias. There is a video on this. I'll give the link in the I button, and also it'll be there in the V card at the end. You can go and have a look at it, how the cognitive bias or how being biased in the market affects you, and how it plays its part in your decision making in taking a trade or being in the market. Do have a look at it. It's a wonderful video, and it'll give you a very good insight of how your mind plays with the situations that the market presents to you. So is there something which is available for you that can predict the market well? Well, there are a couple of models like the CAPM model and the efficient market hypothesis, the EMH, which have a fairly good track record of tracking the market well, of predicting the market well. But the problem is they take some unlikely factors about investors into consideration in the market. Some of them are like, people always have true and complete information to make their decision in the market, or to take the decision in the market. The second assumption would be the amount of risk that a person takes throughout its journey in the market doesn't change. It says the investors tend to maximize their profit by or at the greatest value. It also takes into consideration saying that the investors always makes rational choices. These are not true, none of them. And just because of these faulty assumptions, these models are not perfect. They are very close to tracking the market, to predicting the market, but they are not perfect. And the reason, they cannot explain. Strange things happen in the market. It's something like, it's seen that generally at the beginning of the month, the stock market performs well. And also again, certain stocks perform very badly in certain months in a year. The September effect. No rational reasoning, but it's generally believed that investors sell off a major chunk of their portfolio to book some profit during this part of the year. The October effect. It's a perceived market anomaly that mostly the market downturn and the market crashes are most likely to happen at this time of the year. Do they always happen? No. Do they happen? No. And yes, they do. And also they don't. There are no rational reasoning behind these things happening, except for human perception and behavior. What an investor thinks, what are his limitations, what will be his decision at one particular moment, it's very hard to predict. But we can still broadly segregate them under some main categories. Mainly, the attenuation bias, the national bias, under-diversification, pushiness or being blunt. So what are these? See, it is seen that many a times investors, they flock towards the stock market when they get some news about a big merger, a big investment coming from a large corporate house. Small companies who doesn't have a name, fame at this point of time, they use these tactics to lure investors to come their way, buy their stock. They spread the news that we are merging with a big corporate house. This news, they trigger an adrenaline rush in the investor's mind, in the investor's body, and they rush to find out what's exactly happening. These are the news which attract the investors, and they put their money in anticipation of making a huge profit. People even refrain from investing in large cap stocks and put money into these particular stocks because they know if a large cap company has put in their money, if there is a merger, if there is an acquisition of this company by a huge company, then the price of this small stock is going to go skyrocketing. It's going to go high. So in anticipation of making huge profit, they don't even bother to go and invest in a stable, secure, a much more stable and much less riskier assets. They give more attention to these companies, these news, these mergers, acquisition news. The news which may be true, maybe it's bought towards them, has been pushed towards the investor to make them invest. You never know. National bias is like being biased towards your nation. Two different companies making the same product, or giving the same services, you would still stick to getting the product and the service from the company which is from your own country, rather than buying shares of the foreign country, even though you know that the company there is much more stable, it is much more profitable, it will give you good returns. No, you would still stick to your company, your country's company, the company that belongs to your country. That's national bias. In under diversification, sometimes the young investors, they buy and hold on to a loss-making stock for a very, very long time in anticipation that this stock will bounce back and they'll earn the profit, because they have time in their hand. They are into their 20s or 30s. They think they have 20-30 years in front of them, so they can just hold on. What they neglect or what they miss out on is a wider diversification can actually prevent or nullify the loss that they have already incurred in this particular stock and actually come out profitable. Even they might come out profitable in a very short while. They miss out on that. Sometimes people are pushy, or they are just blunt. They think they know the market. They think they are good. They think they are good at what they do. They don't change their investment strategy because they believe what they do or what they're doing is good. They believe themselves that they know how to manage money, they know how to manage the market, they know how to manage their wealth properly. At this point, when these people, they make a profit from the market, they tend to go out and tell their friends that, see, this is what I've done, this is what I've purchased, and this is the profit that I've made. I made money in this trade. They boast off to their friends, family, relatives, showing that, trying to portray the kind of hold that he has in this market. More often than not, they actually do not realize that the profit that they have made from this market is actually not a profit made due to his own knowledge and technical expertise, but it's sheer luck that has given him the profit. See, in our opinion, if you want to make some profit from this market, you have to be less human. You have to be less human in choosing where to put your money. You have to be less human in ignoring the news, the noise that we say, that comes around, that comes from the market, that you see around you. So this sounds harsh because it will help you try and pick stocks from your biases and help you understand where you went wrong the last time. It will help you analyze and find out what made you take that faulty decision the last time, and you can prevent it from making it the next time. Can you find that out? Look for traits, ask questions, you will find it. So what can you ask? Does it commonly happen with you that you tend to believe that you have taken a right decision? Do you feel like that? Do you take credits when you win in the market and blame outside or other factors when you lose? Go through this check. Put a check as if Have you bought or purchased the stock or any kind of security just to prove a point to your friend or your family or your relatives? Or is it really that you have purchased it because you have analyzed it perfectly well? Or is it just to prove a point to your friend? Ask yourself, have you purchased the stock or a security just based on your gut feeling that this company is good, just because you see their products or their services all around you? You get to hear that name, every day you see their banners in your locality. Is it just because you see that? Is it just because you have seen a lot of advertisement and your friends, relatives and everybody around you use the company's product? Is it only because of that have you purchased that stock? Have you bought a stock of a company? Is it only because of you using its product and you like their product? Is it only the reason why you purchased their stock? It's just because you like their product, you use their product on a regular basis and you like them? Ask yourself, have you sold off a company or a security in anger just because it has not given you profits for a couple of years? Just because it has stayed where it was in the last couple of years? Have you done that? So a lot of questions. Ask yourself a lot of questions to give you a choice against the facts. So what it is? A choice against one question. Have you analyzed the security? Have you analyzed the data of that stock before buying it, or are you just buying it because of those emotional factors that we have just discussed? That's an ultimate question. I understand it's not easy to get to know everything about a stock. It's really difficult. But doing a thorough research and knowing as much as you can helps you make a right decision. A good thorough research will take you more closer to making a more informed decision, which is based on logic, facts and numbers and not emotions. And that is what will make a huge difference. That's all for today. Thanks for watching. See you again. Till then, SG signing off. Goodbye.